Hey Don, thanks for the great commentary today again, as all of your commentaries are very good, very thought-provoking. On this particular one, it's actually funny because I came to the same conclusion as you did in my last two blogs. Because what I did, usually I'm technical 100%, but what I did as of late is I actually downloaded the S&P 500's PE ratio for the last since it started in 1936, and I started running uh, building a graph from that and running some statistics on that, looking at it. And I found that the stock market starts to bottom out basically long after the PE ratio of the S&P has topped out and is starting to improve. So company earnings are improving about a year ahead of where the market actually starts picking up on this fact and starts going up. So it's not particularly forward-looking, as you said. And I did look at this here in the winter of 2001, 2002. P/E ratio topped out at 46 or so and then started going down from there, but it took until the 2003, the spring of 2003, for the market to actually start going up again from that point. So it took the market a long time to figure out that things were actually improving. So it's not particularly forward-looking. A couple of other things I did notice about that, which was pretty interesting, is one of them is that the lows in the PE ratio are definitely increasing ever since last time they hit a bottom in 1976. They've been steadily increasing, and last time they bottomed out at about what is that, about 16, 17 or so, and they've been going up. Now, the other thing that I noticed is that currently, at the beginning of the year, the P ratio was actually up in the 60s, which has never happened before historically. And for the last 2 months, it actually went as high as 134 and 144. So from that point of view, I really cannot see a recovery if history repeats itself at this point, because the S&P PE has not topped out yet. The market can only recover after it has topped out and it is improving again, if we look at historical precedent. So from that point of view, again, the market doesn't seem to be rather forward-looking. Um, it just seems to be driven by emotion at this point. So, as Warren Buffett would like to say, in the short term, the market is a voting mechanism, but in the long term, it is a weighing device. And at this point, the weights just do not make a lot of sense. The market is technically overbought as well as being fundamentally overvalued. So there to be a recovery at this point, personally, I don't see it. But we'll see. We'll let the market see if it's forward-looking this time around, as you said. I do have my doubts personally. But anyways, great commentary. Thanks a lot, and all the best next week. Hope you make lots of money. Bye.